There's a quiet truth that most people refuse to accept until it is far too late. And that truth is this. When the systems we trust begin to fracture, the things we thought were ancient history suddenly become our immediate future. What I am about to show you is not speculation. It is not theory. It is a pattern that has repeated itself across civilizations for thousands of years, and it is happening again right now in slow motion, while most people remain completely unaware. Ray Dalio, the founder of Bridgewater Associates and one of the most successful macro investors alive today, has spent decades studying what he calls the big cycles of empires and economies. He has mapped the rise and fall of major powers, the birth and death of reserve currencies, the way wealth evaporates and reappears in different forms. And what his research reveals is not comforting. It is a map of inevitability, a pattern so consistent that you can almost set your watch by it. The question is not whether it will happen. The question is whether you will be ready when it does. And the answer for most people is no, not yet. But that can change. And it starts with understanding something that most investors have completely wrong. The asset I am talking about is gold. And no, this is not about gold bugs or conspiracy theories or doomsaying. This is about math. This is about history. This is about what happens when the systems that hold wealth together begin to come apart at the seams. Ray Dalio has been explicit about this. In his research on paradigm shifts and in his public writings, he has outlined a scenario where the very foundations of our financial system face pressures that have historically led to one outcome. And the asset that has consistently preserved purchasing power through every single one of those transitions is gold. Not stocks, not bonds, not real estate. Gold. Let me show you why, and let me show you what you are not being told. The world looks stable right now. That is the dangerous illusion that keeps people vulnerable. Markets are open, paychecks arrive, prices fluctuate but seem manageable, the grocery store is full, the ATM works, the numbers in your bank account still mean something, and so people assume that the system will continue functioning the way it always has. They assume that the dollars in their accounts will be worth roughly the same next year as they are today. They assume that their savings are safe. They assume that the institutions holding their wealth have their best interests at heart. But history is littered with people who made exactly those assumptions. Consider Weimar Germany. In 1922, the German economy appeared troubled but functional. The mark existed, banks operated, people went to work. And then, over the span of just 2 years, the entire monetary system collapsed so completely that children used banknotes as building blocks because the paper was worth more than what it represented. Life savings became worthless overnight. The middle class was obliterated. The social fabric tore apart. And from that chaos emerged forces that reshaped the entire world. Now ask yourself, what made that possible? What allowed a currency to go from functioning to worthless in such a short time? The answer is debt. The answer is the printing press. The answer is the moment when a government or a central bank decides that the solution to too much debt is simply to create more currency out of nothing. It works at first. It makes the numbers go up. It delays the reckoning, but it does not eliminate the problem, it transfers it. It moves the burden from governments to the people holding the currency, and eventually, the math catches up. This is not ancient history. This is not a fairy tale. This is the mechanism that underlies every major currency collapse in recorded history. And right now, the major economies of the world are running deficits at levels that would have been unthinkable a generation ago. Debt is growing faster than production. Obligations are compounding while the tax base stagnates. And the primary tool that governments reach for when the pressure builds is the same tool they have always used. They print. They devalue. They reduce the burden of their debts by reducing the value of their currency. Ray Dalio has described this as the third major paradigm shift of our lifetime. The first was the end of the gold standard in 1971, when Nixon severed the last connection between the dollar and real assets. The second was the shift to negative real interest rates, where the cost of borrowing became effectively free or even paid to happen. And the third, which he believes we are now entering, is the transition away from holding currency and debt as stores of wealth, toward assets that preserve their actual value, toward gold. Here is what most people do not understand about gold. They think of it as a metal, a commodity, something that sits in a vault and does nothing. They compare IT to stocks or bonds or real estate, and conclude that it is not interesting. But that is a profound misunderstanding of what gold actually is and what it has always been. Gold is not an investment in the traditional sense. Gold is a bet against the financial system. It is a bet that the people managing that system will eventually make decisions that erode the value of the currency they control. And historically, that bet has been remarkably successful. Think about what happened the last time interest rates rose dramatically in the United States. In the late 1970s, inflation was running above 10%. Savings accounts were losing purchasing power in real terms. Bonds were getting destroyed. And gold, which had been trading around $35 per ounce when the dollar was depegged from it in 1971, spiked to over $800 per ounce by 1980. That is a 23-fold increase in less than a decade. Not a good decade, not a stable decade. The decade when the financial system was under maximum stress and people were looking for somewhere safe to put their wealth. Now think about what happened during the 2008 financial crisis. Lehman Brothers collapsed. The stock market lost half its value in 18 months. Interbank lending froze. Governments around the world launched unprecedented stimulus programs. And gold, which had been around $500 per ounce before the crisis, rose to over $1,900 per ounce within 3 years. Again, the asset that moves inversely to system stress. The asset that benefits when everything else is failing. And in 2020, when the pandemic froze the global economy and central banks printed trillions of dollars in a matter of months, gold hit new all-time highs. Not because it did anything special, not because someone invented a new use for it, but because the system was under stress, the currency was being diluted, and people around the world were looking for something that would not lose its value when the printing presses started running. The pattern is not complicated, it is not mysterious, it is as consistent as gravity. When debts become unsustainable, governments print. When they print, currencies weaken. When currencies weaken, the price of real assets rises. And gold has been the original real asset for 5,000 years. It is what empires turn to when the paper system stops working. It is what central banks hold when they want to signal strength. It is what families have trusted for generations when everything else feels uncertain. But here is what is different about right now. And this is the part that most people are still not grasping. The previous crises, as severe as they were, happened within a system that still basically worked. The dollar remained the reserve currency. The Fed could still influence markets. Global trade continued. Institutions held together. But what Ray Dalio and others are describing now is something different. They are describing a shift in the underlying paradigm, a change in the rules of the game, not a recession or a correction, but a fundamental restructuring of how wealth is stored and transferred. There are several forces converging at the same time. Debt levels globally are at historic highs, both in absolute terms and as a percentage of GDP. Demographics in the developed world are shifting in ways that will increase pressure on social safety nets while reducing the tax base that funds them. The energy transition is creating massive costs and disruptions that have not been fully priced. And perhaps most importantly, the political environment is becoming increasingly hostile to the idea that existing institutions know what they are doing. When trust in institutions erodes, when governments are seen as incompetent or corrupt, when the political center collapses and extreme movements gain power, what typically follows is a period of instability where the old rules no longer apply. And in those environments, the things that people reach for are not stocks in companies that might not exist in a decade. They are not bonds in governments that might not be able to service their debt. They are tangible assets, real things, gold. The real danger, the hidden mechanism beneath all of this, is not that some disaster will happen overnight. The real danger is the slow erosion of purchasing power over years and decades. Most people do not notice it. Their salary goes up, but their rent goes up faster. Their savings account earns interest, but the things they need to buy cost more. The numbers in their account stay the same, but what those numbers can actually buy shrinks. That is the quiet killer. That is how wealth is transferred from the many to the few without anyone firing a shot. And the only way to protect yourself from it is to hold assets that are not denominated in the currency being diluted. Now let me be clear about something. This is not about predicting exactly when the next crisis will hit or what form it will take. It could be a sovereign debt crisis in a major economy. It could be a currency war when multiple countries try to devalue simultaneously. It could be a geopolitical rupture that disrupts global supply chains. It could be something no one has thought of yet. The exact trigger does not matter as much as the underlying condition. And the underlying condition is one where the system is over-leveraged. The currency is being printed, and trust in the institutions managing it is declining. What matters is that in every one of those scenarios, historically, gold has performed well. Not perfectly, not without volatility, but as a store of value, as a preservation mechanism, it has consistently done what it has always done. It has held its ground while everything else burned. Ray Dalio has not been subtle about this. In his book Principles for Navigating Big Debt Crises and in his various writings on paradigm shifts, he has laid out a framework that explicitly includes allocation to gold and gold-related assets as part of a balanced approach to uncertainty. He does not recommend going all in on anything. He recommends diversification across asset classes, with a specific acknowledgement that in certain environments, the classic stores of value outperform everything else. The question is whether you are paying attention, whether you are willing to look at the historical record and apply it to your own situation, whether you can set aside the comfortable assumption that the future will look roughly like the recent past and prepare for something different. What happens next if you do not? Here is what the math looks like for ordinary people who do not prepare. Their savings, which they have spent decades accumulating, gradually lose purchasing power. The things they planned for, retirement, education, healthcare, become more expensive than they can afford. They are forced to work longer than they planned, or to reduce their standard of living, or to depend on systems that are themselves under pressure. Their children inherit not just their assets, but also the risks that come from having those assets in the wrong form. And the window for making different choices keeps getting smaller. This is not a prediction of disaster. It is a description of what happens when the environment changes and you have not changed with it. History is full of people who had wealth and lost it not because they were foolish or lazy, but because they trusted the wrong things. They trusted the currency. They trusted the institutions. They trusted that the rules would not change. And when the rules changed, they were caught unprepared. The people who came through the major transitions of history in the best position were not necessarily the smartest or the richest. They were the ones who understood that wealth is not just a number. It is a claim on real goods and services. And as long as that claim is denominated in a currency that can be created out of nothing by people with incentives to create more of it, your wealth is not fully under your control. It is under the control of whoever controls the printing press. And they have their own interests, which may not align with yours. So what does intelligent preparation look like? Not financial advice, but a framework for thinking. It starts with awareness, with understanding that the situation is more complex than it appears, that the official narratives about inflation, about growth, about stability are filtered through institutions that have their own incentives to paint things in the best possible light. Ray Dalio has built his entire career on the ability to see systems as they actually work, not as we wish them to work. And the first principle of that approach is that you cannot manage what you do not understand. From there, it is about diversification, not just across stocks and bonds, but across types of assets with different risk profiles. Real assets that hold value when currency is diluted. International exposure that is not concentrated in a single currency or political system. And yes, some allocation to gold, which has properties that no other asset class fully replicates. It is also about psychological resilience, about being able to hold positions during volatility without panicking, about having a framework that does not require the future to look exactly like the past in order to be successful. Every major investor who has survived multiple cycles talks about the importance of staying calm when everyone else is panicking. That calmness comes from understanding the underlying mechanisms, from having a framework that explains why things are happening the way they are. And it is about patience, about thinking in terms of decades, not quarters, about accepting that the big moves in the world take time to unfold, and that the people who benefit most are the ones who can hold their positions through the noise and the uncertainty without being shaken out. This is how every major shift begins, not with a bang, not with a dramatic collapse that everyone sees coming, but with a slow accumulation of pressures that most people dismiss as temporary noise. And then, when the system finally adjusts, when the paradigm shifts, those who were prepared look like geniuses, and those who were not look around and wonder what happened. The pattern is there for anyone who wants to see it. The historical record is clear. The macroeconomic forces are converging, and the question of what you do with that information is the most important financial question of your lifetime. Ray Dalio did not become one of the most successful investors in the world by following the crowd. He became successful by studying history, understanding systems, and positioning himself for outcomes that others dismissed as unlikely or impossible. And right now, he and others like him are quietly building positions in the assets that historically perform best when the paradigm shifts. The question is whether you are paying attention, whether you can see past the comfortable assumptions to the underlying reality, whether you have the courage to position yourself differently from the crowd. The systems we trust are under more pressure than they have been in decades. The currency is being diluted. The debts are growing. The trust is eroding. And when the adjustment comes, and it will come, the world will look different than it does today. The asset that has survived every major transition in human history is sitting right there. Patient, unimpressive, dismissed by most people as irrelevant, but ready, exactly as it has always been ready. The question is whether you will be. Because history does not wait, and the people who see what is coming will have options that the people who do not will not. Not because they are smarter or luckier, but because they chose to look, they chose to understand, they chose to prepare. The window is still open, but it will not stay open forever. Something massive is happening, and most people still do not see it.